good to go. Good morning. Welcome to this joint overview and scrutiny committee meeting. I'm Councillor Keith Wellham and I'm chairing the meeting today. May I first of all remind you of some domestic arrangements. Please ensure that you maintain social distance from all other persons in the chamber and in the social areas. Please ensure that you wear a mask unless you are speaking or if you are unable to do so, and that you use the hand sanitizer and wipes provided. Please maintain social distance at all times during the meeting and during any breaks. Please ensure that microphones are turned off when not in use. Please do not interrupt other speakers. If you are attending the meeting to speak and persistently interrupt the meeting, you may be asked to leave. Please ensure your mobile phones are on silent or switched off. Additionally, we will be using e-voting for this meeting on the modern.gov app. I'd like to remind everyone present that this meeting will be broadcast live to the internet and will be capable of repeated viewing. The whole of the meeting will be filmed except where there are confidential or exempt items. If you make a representation to the meeting, you will be deemed by the Council to have consented to being filmed. By entering this meeting as a speaker, you are also consenting to being recorded by the Council and to the possible use of those images and sound recordings for webcasting and/or training purposes. The Council, members of the public and the press may record, film, photograph or broadcast this meeting when the public and the press are not lawfully excluded. So, can I move to the agenda, please?
Sorry, Mr. Chairman. Just a point I'd like to raise about the mask wearing. It strikes me that it's... What's the logic of wearing a mask when you're not speaking, but when you're speaking you can take your mask off? Surely particle go when you're speaking, not when you're not speaking. I just wonder what the logic of this arrangement is.
Well, we've had advice, haven't we, on the procedure? Do you want to answer that, please?
Chair, I'm happy to try and assist with the question. Our current risk assessment for use of this room as a meeting space requires that we wear face coverings if you're not covered by one of the reasons that exclude you from wearing face covering. However, we do keep that under continual review with government guidance, and I do know that the Health and Safety Officer was here on Friday having a look at the room again, so that advice may change. In terms of...
Speaking, you've got your face uncovered. When you're not speaking, you cover. Please, could you tell me where the risk is if you're not speaking? Doesn't seem to make any sense.
So the reason for removing masks when you're speaking is because obviously it's quite muffled in the microphones, and particularly for members of public who may be watching on the live stream, and hopefully most people will be talking for a very short amount of time, and therefore the risk is reduced by just removing it for a short amount of time. Thank you, Chair.
That we've been given. Well, it's what the risk assessment has stated, so that is the procedure for the meeting. Thank you. So, moving to the agenda, apologies for absence and substitutions. Do we have any, please?
Good morning, Chair. We have received apologies from Councillor Grandon, and Councillor Fleming, the Cabinet Member for Environment, has kindly forwarded her apology as well.
Thank you. Declarations of interest. Are there any declarations of interest, please?
Chair, I'd like to declare non-pecuniary interest as a member of Mid-Suffolk Suffolk Holdings Limited.
Thank you very much. Can we now turn to the minutes of the meeting held on 24th of May 2021? Are there any points regarding the accuracy of the minutes, please? Councillor Eppingham.
Thank you, Chair. I think with regard to item 60.11, in the last, the penultimate sentence, it ought to be, however, she thought.
Sorry, this was 60.8, was it?
It's on page 9, Chair, 60.11,
Oh, sorry, I haven't got page numbers on my version.
Sorry.
So it's the paragraph that begins, the monitoring officer had experienced.
Exactly.
However, she thought, yes, on the 5th line, it's just to add a T to the word. Thank you very much. Having made that amendment, are you happy for me to sign the minutes? If so, can I have a proposer, please? Councillor Muller, and a seconder, please. Councillor Carter, thank you very much. So, a governance officer will now conduct the electronic vote.
Yes, members, if you go to the plus sign at the top of your agenda and go under attendance and voting, you will scroll down and you will see there's a blue line. Can you please click on that? And that's where you have to vote. Thank you. So, Chair, that is 9 votes for and 1 abstention, which is correct. Councillor Maybury, you were not at the meeting, attended the meeting. Is that correct?
So I will abstain.
Abstain. So that is 9 votes for and 2 abstentions.
Thank you very much. The minutes of the meeting are confirmed. To receive notification of petitions in accordance with the Council's petition scheme. Are there any, please?
Unreceived, Chair.
Thank you very much. Questions by the public?
Thank you, Chair. We have received 2 questions, from one from Mr. Roger Young and one from Mr. Thomas Morelli, which the Chair will now read to the committee. Thanks.
I'm just checking for the Councillor Young question. The question from Mr. Roger Young is, why was it necessary for CIFCO Capital Limited to allocate 983,269 new shares on the 20th of the 1st 2021 to each shareholder, BC and MSDC, and when and where were the BDC councillors informed and subsequently agreed to such action? There is a supplementary question, but I feel it's better to take these questions when we come to the item 8, as they refer directly to item 8. So we'll leave those questions until then. And I have here the question from Mr. Thomas Morelli. The Joint Overview and Scrutiny Committee last scrutinised the shared legal service in July 2018. Since that time, there have been a number of occasions relating to successful or conceded legal challenges against Babergh and or Mid-Suffolk District Council. Most recently, the claim for judicial review brought by Boxford Parish Council, which was part conceded by Babergh. This raises the potential issue of the quality of advice being provided by the shared legal service. In addition, given the time that has elapsed since the committee's last review of the shared legal service, it would seem prudent for updated scrutiny by the committee to be conducted. Given all this, will the Overview and Scrutiny Committee commit to carrying out a full review of the work undertaken by the Shared Legal Service to ensure that it is still performing in line with expectations and is providing good value for council taxpayers? And my response is this. Members of this committee will be reviewing their forward work plans at items 13 and 14 of today's agenda, and will consider, as part of these items, the request for a full review of the Shared Legal Service. Thank you. Item 6 is questions by councillors. Do we have any questions by councillors?
Chair, we have received a couple of questions for Councillor Grandin, who is member of the committee, who is absent today. I am not sure, would you prefer to read them now, or would you prefer to read them under the items for where they are directed at?
Yes, thank you. They are questions which directly relate to item 8, and I would prefer to read them at item 8 at the same, well, not at the same time as the previous questions that we've referred to, but following those questions. So if you're all content, we will leave those questions as they relate to the CIFCO item. We will leave them until then. Thank you. So
No more questions, Chair.
Thank you very much. So we move on to item 7, which is an executive summary of the CIFCO Capital Limited Business Trading and Performance Report for 2020 and 2021. And I invite Emily A. Tack to present this executive summary.
Good morning, all. The executive summary is just a précis of the business plan report and document that has been provided at the request of the chairs to help aid this meeting. So I hope it has been beneficial. We have a presentation to deliver, and I know that Councillor Gould has a brief introduction into the main report and business plan that's being presented. So I don't think the executive summary necessarily needs to be discussed in isolation, but happy to if that would be helpful.
Yes, thank you very much. So we will move on to item 8. So please note that the report included in the agenda pack is the draft report to full council, and that the recommendations in the report are for council. This committee has to make our own recommendations to council. The Joint Overview and Scrutiny Committee will be examining the robustness of the business plan and not the governance structures of CIFCO or the basis under which it was set up, or any decisions relating to that or its terms of reference. I'm unlikely to allow questions in those areas as they fall outside the area of responsibility of this committee and would be a matter for each full council. Please note that any questions by non-committee members should be for point of clarity and for the item discussed, as the debate itself will be for the committee and for the committee members only. If we have got any non-committee members, they will wait with their questions for clarity until all committee members have completed their questions. I will move to item 15, the resolution to exclude the public up to the agenda to the end of the open session for item 8 if the committee decides it needs to go into closed session to consider the confidential part of the agenda. So I'd now like to invite, is it Councillor Gould who is going to give the introduction and present the report, and then following that, is it for the Assistant Director to give her presentation? After that presentation, we will then take questions from members, questions for clarity from members of this committee.
Thank you, Chair. I'm grateful for the opportunity to present the reports. I'm pleased to introduce the report detailing CIFCO's capital performance over the last 12 months and the proposed business plan for the next 12 months. The business plan is a fundamental part of CIFCO's governance and ensures accountability to its shareholders. And I value this input from the Overview and Scrutiny Committee in this regard. And as the Chair, I think it's helpfully said, the questions for the committee to address are those proposed by him and set out in paragraph 1.2 of the Executive Summary report. Transparency is important to us as a public body, though clearly the Council's commercial interests require some confidentiality. I will take a moment to mention the CIFCO website, which itself helps to promote understanding and accountability. CIFCO has provided the councils with close to £5.5 million net income since its inception in 2017. Delivering approximately 2.2 million to the councils during the last financial year was facing unprecedented challenges as a consequence of the pandemic, and certainly providing the councils with much needed income at this time. I think even the most enthusiastic designer of business stress tests would not have thought of anything as severe as the pandemic. Yet CIFCO has been able to withstand these challenges and continues to deliver income to the councils. The fact it's been able to do this is a testament to the investment approach and strong management of the CIFCO portfolio since its inception, and which has seen rent collection rates above the industry norm. The business plan identifies that the challenges of the pandemic are not behind us and continues to take a prudent approach to CIFCO's financial management over the next few years, ensuring that CIFCO portfolio continues to provide income to the councils to support the delivery of services and projects locally, as well as creating a long-term legacy for the districts to benefit from in the future. Emily Atack, Chris Howarth and Neville Pritchard have a short presentation, Chair, to deliver, and then we'll be happy to take questions along with other members of the panel. We may all know, all of us may know all of the members of the panel, but I will just briefly, with your leave, ask them to introduce themselves and then move to the presentation. Thank you, Chair.
Thank you. Before we do that, does Councillor Busby have anything he would like to add?
No, thank you.
Thank you. Over to you, Emily.
Thank you. So I'm Emily Atack. I'm the Assistant Director for Assets and Investments and also the Managing Director of CIFCO. If I pass on to Chris.
Yes, I'm Chris Howarth. I chair the CIFCO board and have done so really since the inception of the company.
Good morning. I'm Neville Pritchard, Director at JLL, and we've been advising CIFCO during the acquisition strategy, and I've been working in the investment markets in property for the last 33 years.
Yeah, good morning. Henry Cook. I'm one of the non-execs on the board of CIFCO.
Hello, Zoe McLaughlin, Associate Partner at Ensource Chartered Accountants, and we've been involved with CIFCO from inception.
Thank you very much. Your presentation.
Thank you. So if we could put the presentation on the screen, that would be really helpful. So today we've got a short presentation for you just to highlight some of the key aspects of the business plan and the company's performance over the last 12 months. As previously mentioned by the Chair, the focus of Overview and Scrutiny today is to consider whether the business plan is robust and appropriate for the next 12 months, whether there's sufficient confidence in the management of CIFCO, to look at whether the current performance of CIFCO delivers good value to the councils, and whether the KPIs are appropriate measures of performance, both over the last 12 months and those proposed for the forthcoming 12 months. So I pass on to Chris.
Thank you, Emily. Yes, it's an important time in the growth and life of CIFCO, because really, to all intents and purposes, we've come to the end of the acquisition process. We now have a portfolio, which obviously we'll talk about in more detail shortly. The final sums were drawn down in March to enable the completion of 2 further properties, and also importantly to provide funds for future capital investment in the assets. As we'll see a bit later, we're keen to improve the sustainability, and it's also important to maintain the value. And that is now, having gone through the acquisition process, the focus and purpose of CIFCO is to generate income for our shareholders and add value where possible, of course, to the assets. And we have, as you'll see shortly, you'll see if you've read the draft business plan, we have changed the KPIs as a consequence to reflect that full investment status and the emphasis on sustainability. What we have created is a diverse portfolio of assets and tenants, and the important thing about that, it mitigates exposure to individual tenants, to individual sectors, individual areas, and I think really the performance of the portfolio, particularly over the last year, as it's been said, you really couldn't have found a much stronger challenge of a portfolio than what we've been through over the last year, 18 months. And that has really proved, I think, the strength of that portfolio. As part of the process, obviously, what we've done, the process of investment, it's been very important that we are fleet of foot, look at changing our investment strategy if that is justified by the market. So, for instance, since 2018, the portfolio has been diversified away from retail assets to a greater emphasis on industrial assets, which has been the much stronger sector. And I think the total net income received by the councils to date of just under £5.5 million since the inception of the portfolio. And as I referred to earlier, I mean, despite the challenges of COVID, the quality of the portfolio has led to most vacant properties being re-let, and voids are low at 3%. You know, we have had voids, we have had tenants go into administration, but the quality of the underlying asset, that's been the important thing, that's what we've been looking at, is the quality of that underlying asset. Next slide, please. So the purpose of the business plan, really, as far as the board is concerned, is to monitor the performance of CIFCO over the previous financial year, which I think it does. It provides a framework and guidance for investment and management going forward. It's obviously a very important part of the company's governance, and it keeps us as directors accountable against delivery of the business plan. On that, I will now hand over to Neville, who will talk us through the market.
Hello. Like other parts of the economy, then the property investment market has been affected by the pandemic, and it slowed significantly in 2020. And in fact, over the course of that year, there were 42.7 billion of transactions, which was 18% down on 2019. Having said that, as things eased in Q4, there was a significant uptick in activity. And we've seen a similar sort of thing actually occur this year, which is that the start of the year was a little bit quiet, but there's been a significant increase in transactions. There's been a lot more investor activity and interest in properties going forward, and here we are at close to the end of Q2. We've got about 22 billion of transactions occurred so far, but we're actually busier than we've ever been. So the likelihood is that we think we're going to end up at a year which is probably, all things remaining as they currently are, a much greater turnover of properties going forwards to about 50 billion by the end of the year. The key sector which is performing incredibly well is the industrial and the warehouse sector at the moment, and we've seen alternatives as well, in particular some of the health sector type properties performing very well, and strong investor interest in those. The first half of this year has seen a 291% increase in turnover in warehouse and industrial properties, which gives some idea of the strength of demand for those assets at the moment, and that's pushing values up very strongly at the moment. It's 83% up on the first half of 2019, which we can term as another normal year. So the returns that one's getting at the moment on prime industrial properties are very short. You're down to something in the 3s in the London area, and in regional centres about a 4% return, which in contrast to the returns from the CIFCO portfolio and some of the assets we've acquired just shows how values are moving very strongly in that sector. The retail sector is obviously been hit hardest and has been in a difficult place with the increase in online retailing, and that has been accelerated.
Just a second, because is there a problem with hearing? Or?
No, not at all. I'm just saying, I'm terribly sorry, but actually I can't see the summary at all. So I'm assuming that what you're saying is what's in front of us. I can't really see what's up there, I'm afraid. Are you summarising that?
I'm summarising it.
That's
and talking
fine.
around
All right,
it, yes.
thank you.
Yeah, absolutely.
Okay, thank you.
So, on the retail markets, we have seen quite a strong return from investor interest in the likes of food retailers, obviously, the supermarkets, discounters, homeware, DIY. They're all starting to trade quite well, which is positive. And so, as shops are opening, we're seeing some interest recovering there, which is good. On the alternatives, as we would term those properties which are not retail, office, industrial, car showrooms and student accommodation still recovering slowly from COVID issues, and hotels. Health sector obviously very strong at the moment. In the offices sector, then, there's been a lot of discussion as to any changes to working and how the whole demand for office space is likely to look going forwards. The good news is that we're seeing average vacancy across the UK at 5.1%, which is actually a lower vacancy than the 5-year or indeed the 10-year average. So that's a positive, and I think we're all finding that the shortcomings of Zoom mean that it's good to be back with colleagues and in an environment where you have a social and team ability and a way of training your colleagues. The fact is that investors are much more interested now in buying office properties, and they perceive it's a good time to get in because while sentiment is slightly against it, there is potentially attractive pricing available. And we've seen 6.6 billion of transactions in the first half of this year so far in the office sector, and a resurgence with some private equity buyers actively buying several hundreds of millions of property in the office sector to get an exposure to that before it becomes much more upbeat, and that's already starting its course. Overseas investors have clearly been absent because they've not been able to get here, but we've seen an awful lot of private equity coming through from the US in particular, where people like Blackstone have put over £1 billion into UK property in the last 6 months. And we've seen a lot of interest in the Middle East as well. There is still a very good demand, and I think the key message is to get that we expect the investment market to be rather busier and more upbeat this year than over the course of the last year. I feel I should say next slide, please, actually. But just going through the occupational market, because the key thing to the investment market is the occupational market drives it. It's not just the weight of money trying to get into the market, it's the fundamentals of occupiers, because without occupiers and customers and people paying rent, then the investment is obviously not an attractive option. The The fact about retail is that even the strongest have had a difficult time. We've read about John Lewis with their closures, and online is continuing to grow. But we are seeing independent shops starting to be favoured by shoppers out there, and in particular the DIY sector, as people improve their homes, has seen considerable amount of work. And if anybody who's tried to get a builder recently, you'll know that that's a very difficult thing to do. The Bank of England. Not to take away from the fact that COVID has been very difficult for a lot of people who have been adversely affected, but the Bank of England has estimated there's 180 billion in extra savings amassed within the economy, and the consumer confidence is increasing, and so one hopes that some of that will feed through into retail demand going forward. I mentioned earlier about the amount of people starting to move into investing in the office sector again as that's starting to recover. It's no surprise that last year there was a much lower take-up of office space than for a long time, but that was because nobody could actually go into the office space if they took a lease on it, so that's no surprise really. But just to reiterate that the current vacancy rate is lower than the 5-year average or indeed the 10-year average. Retail growth in prime centres is still showing rental growth is still showing some increase in strong centres with the limited supply, and we anticipate prime rents will still continue to increase in the better centres depending upon the local circumstances. Again, just to reiterate, the industrial warehouse market is seeing unprecedented activity. The driver for that is partly COVID and e-commerce, and in fact over the course of last year 42% of the better quality industrial and warehouse space was taken by what we term customer fulfillment centres, which is Q&I, places which send out parcels, and that just shows the depth of that demand. Set against that, we've seen a continuing lack of supplies as new development which is suitable comes forward. We've seen a substantial demand not only from the e-commerce side of things, but Brexit has driven demand for storage of components and stock as people get worried about the supply chain coming from overseas. We've seen a reduced supply from higher build costs, and we've seen the loss of secondary product to residential in particular, with the residential market being heavily underpinned and promoted by the government with the likes of stamp duty cuts and first-time buyer incentives. So the fundamentals remain strong for the industrial and warehouse sector, and we anticipate ongoing growth there and total returns in excess of 6% for the next couple of years. Thank you.
Thank you very much, Neville. Moving on to the side, this is looking backwards, really looking at the key investment criteria which we've used for our investment over the last year. Firstly, a target portfolio yield of between 5.75% and 6%. We've really focused on strong asset fundamentals, good locations, good quality assets, and particularly on core assets that provide security of income. It's been particularly important in this quite difficult time. In terms of lot size, we brought that down slightly, with the upper limit from 15 million down to 12 million, to give us the right sort of number of assets across the portfolio to give that portfolio its strength. As far as regional bias is concerned, there was certainly a weighting towards the eastern region. We've been keen to buy assets in the eastern region. We have certainly never bought an asset in the eastern region because it was in the eastern region, but we have certainly looked at assets very closely if they're in the eastern region. Obviously, what is absolutely important as far as the portfolio is concerned is to make sure that we have the right assets which give the strength and the security of income. And we do have a reasonable number of assets in the eastern region. Look particularly at quality locations, where there's a limited supply, good occupier demand. It's very important to look at when you're looking at the relatability of a building, and that's obviously been particularly important during the pandemic to make sure that those buildings where we have had problems with tenants, where we have lost tenants, we've been able to relet them. And again, as part of that, obviously the modern fabric with occupational flexibility is very important, minimising depreciation, capital expenditure, sustainability. I mean, sustainability obviously is a big focus for us now. To an extent, what we can do is limited by the fact that the majority of our buildings are let on full repairing and insuring terms. So it's very often down to the tenant, to the occupier, to drive forward that the sustainability. But obviously that is something which we are keen to encourage tenants, and when we get buildings back, then obviously that's something that we're looking to really significantly to improve the performance of the portfolio. As I said, so full repairing and insuring, FR&I, lease structures to quality tenants or occupiers suited to that location. That means that the costs of maintaining the building is down to the occupier. And then we looked at strong rent reviews, either based on RPI or upward-only rent reviews. So we had a further 40 million to invest. And if we go on to the next slide, you'll see that, let's get on to the right page, that we acquired 7 assets, but to do that, we looked at 111 assets. And it's important to bear in mind that before we actually looked at those 111, then Jones Lang LaSalle, our investment advisors, they will of course have looked at several hundred assets before they actually put them to us to consider. Well, we looked at 111, we rejected 85 as unsuitable, submitted offers on 26, and out of those we acquired 7. So it's been very much a very careful look at a significant number of assets to find the ones which we felt were right for the portfolio. Of the 7 assets acquired this year, 5 are industrial and trade properties. There's an office building let to the NHS and a health centre as well. So that total expenditure of about 35 million or 37 million with costs, and adding about 2 million to the portfolio rental income. So just moving on then to look at the summary, you'll see here where the portfolio was beginning of 2020 and where we are now in 2021. Total asset value now of just under 84 million, with just over 5 million of contracted rent, and an ERV, estimated rental value that is, of 5.5 million. So in other words, that's when all the rent reviews and rent increases have gone through. We now have a total of 21 assets with 90 tenants. And again, that's good, 21 assets, 90 tenants, that's a good spread. We're not overly reliant on any one asset or any one tenant. The WALT, that's the weighted average unexpired lease term, in other words, all about the security of the portfolio, has increased now to 7 years to breaks in leases or to expiry 8 years and 6 months. And then you can look at the initial yield figure, 5.6, down a little bit. I mean, one of the things about yield and about the portfolio itself is that when we originally started looking at the portfolio, we did look at getting a small proportion of that portfolio in slightly riskier assets, which gives more opportunity to increase value, and you would give a higher yield. We found that over the last 2 or 3 years, we really couldn't find any assets like that which were at the right yield. It was quite a hot market, particularly before the pandemic, and therefore the yields of that sector of the market were compressed. So we didn't acquire anything like that. So what we've ended up with is a portfolio which is more secure, perhaps, than we originally intended, but at a very slightly lower yield, which explains those figures there. The void rate, it says here 5.72. I think, Emily, that's now gone down to just about 3.5%. And you can see the running yield on the portfolio is about 5.2%. Now just looking at some of the weightings within the portfolio, looking at the sectors that really reflect what I was just been saying. You can see that high street retail, the target weightings were 10% and retail warehouse 10%. Now we're down below that, what we've ended up with the actual portfolio. The office sector is exactly within where we thought it would be. But we have, as we said earlier, we focused on the industrial and warehouse sector, which has been a very strong sector. It looks like being a very strong sector going forward as well. So we have 45% of the portfolio within that. The alternative sector, we're lower in that. We would have liked more alternatives, but it's a matter of finding the right assets at the right value that we were happy with, and that's where we've ended up. And then looking at the portfolio weighting and the target risk profile, this slide reflects what I was saying about the security of the tenants, the security of the assets. You can see there in the target risk profile for 2021, there's 0 to 5% of value add. That's the little grey bit at the top, the little light grey bit at the top. We really ended up with nothing in that sector. So therefore, we've ended up with a more secure portfolio with 69% of core, really strong assets, 31% of assets where there is some opportunity to add value to manage the asset, and obviously that's important part of thing for the board, to do going forward. But we've ended up with as I say, a stronger, less risky portfolio than perhaps we had originally intended because of the market conditions. And with that, I will hand over to Emily.
Thanks, Chris. So this table looks at CIFCO's key performance indicators over recent times and shows the performance against those targets. So this table is within the report that you've all received, but it shows that the target net initial yield was 5.75%, and we've actually seen an actual of 5.6%. As Chris mentioned, this is a reflection of probably the more secure portfolio that we've acquired over the time. Equivalent yield, target of 6%, an actual of 6.15%, so within just ahead of target. And the third KPI related to full investment, which we have got very close to in terms of actual investment being 99.2 million against the 100 million fund. And then the final KPI relates to rent arrears. We have a bit more information on this further in the presentation, but ultimately our target is less than 5%. This has been a figure that obviously has fluctuated over the last 12 months. And in the Q4, when this report was produced, we were at close to 5%. Last week, just ahead of the June quarter day, we had actually reduced arrears to around 3.5%, with some subsequent payments being made. So that's obviously good news as well. So just moving on to the proposed KPIs for next year. The board has looked at KPIs and reviewed them in the context of where we are currently. So we've obviously completed the acquisition phase of CIFCO, and so we needed to review and add in some new KPIs so that they're appropriate to CIFCO's actual situation. So the first KPI is based on rental income effectively. So it's looking at increasing the contracted rent from £5 million per annum by the 1st of April 2020 to CPI plus 1%. So we're looking to see rental growth in that area. We're looking at maintaining the equivalent yield target of 6%. That's been a consistent KPI throughout the life of CIFCO and is still relevant. Chris mentioned earlier, we're also focusing further on sustainability. So we have a new KPI which relates to the sustainability of the portfolio. So the current average EPC score for the portfolio is a D rating with a total of 6,628 points. and we're looking to reduce that by 10%, with a target that would bring us into a C rating. We acknowledge that there is still work to be done in this sustainability space, and we may not have the right KPI at this point in time, but as the market progresses further and more indices become available, then we'll obviously look at that. But we wanted to have a KPI that at least was a starting point to show that we were actively working towards improving our sustainability. And then finally, the last KPI has stayed the same. Again, it's a consistent KPI in terms of benchmarking CIFCO's performance and relates to quarterly rent arrears, and we're looking to have that figure at below 5%. So, just moving on, COVID-19 has had a big impact on CIFCO's operations, as it has on the country as a whole. So we have seen 5 tenants who've gone into administration, and 1 company voluntary agreement that's been entered into. And that has had the consequence of approximately £300,000 worth of bad debt being written off in the last financial year. We saw voids reach as high as 7% in September, and they're now back to around about 3.5% following some of the relettings that we have undertaken. We've managed this situation by working with tenants, and in some cases we have been it's been necessary to have payment plans with tenants, and that has included a range of options from payment, deferred rental, or perhaps monthly payments rather than quarterly payments as is contracted. As you can imagine, this has had some impact on CIFCO cash flow. But as we mentioned earlier, CIFCO's rent collection actually has been above the sort of market benchmark. So I know this table is really small, and I apologise for that, and I'm more than happy to circulate it at a later date, or perhaps include it in the council report when it goes to council in July. But this basically shows that CIFCO's rent collection figures, so for example in June 2020, at day 90, CIFCO's rent collection was at 94.78%, compared to 87.89% of our managing agent Workman's client rent collection, and compared to the industry standard alt remit, which was only at 72.5%. So it's just to show an indication of how we are, or CIFCO has been, outperforming the market in this space. COVID has also provided some opportunity for CIFCO as well. So if I just move on to this slide, in some cases we have had some premises back. This is one of the premises that came back to us where there had been a tenant failure, and we've actually taken the opportunity to refurbish the building, and that has resulted in a much better tenant being secured, with a much stronger covenant strength, but also increasing the rent from £14,000 per annum to £20,000 per annum. Chris mentioned earlier on that we are keen to invest in our portfolio and ensure that we maintain the value of the assets. And so as part of our strategy to mitigate voids particularly, we have committed to undertake some capital investment in the portfolio, and this is a summary which, again, this table is within the reports that have all been submitted, but shows an expected capital investment of around £800,000 in the portfolio. And as I mentioned, we have, with 24 Kingsway in Norwich, we have taken that opportunity to refurbish the unit and increase the rent, and we have a similar situation with some of our other units. We're currently undertaking a significant refurbishment of a unit at Pasadena Way, which will really enhance the unit, will help to improve its sustainability, as well as attracting better tenants and higher rents. So in terms of the business plan, again, these points are all set out within the report, but just in terms of highlighting the main focus of the business plan for the forthcoming year, we're looking to retain all of the assets at the current time. We're not anticipating any sales. That's not to say that we don't continually review that position, but that's what we're anticipating for this year. We're seeking to complete the purchase of a convenience store asset later this year. We're not anticipating any further acquisitions thereafter. We're keen to maximise our revenue, and a lot of that is through proactive engagements with tenants and the lease events that are coming up in the portfolio. Clearly, during the tighter COVID restrictions, our managing agents didn't have the same ability to inspect properties, and we're keen, obviously, to reignite that inspection regime so that we can undertake all of the inspections that we ordinarily would do and make sure that the tenants are looking after the properties and maintaining them appropriately. We've mentioned quite a few times the importance to us of the ESG and sustainability credentials of the portfolio, and that we're looking to bring forward a measurable plan to demonstrate our achievements in this space, and we look forward to reporting that in 12 months' time. We will continue, obviously, to keep tight budgetary and credit control of the business. We'll be managing lease expiries, and we will be strategic in the deployment of our capital expenditure as is set out previously. As always, we will continue to monitor the markets for opportunities to enhance value and also income, and we will be implementing individual asset initiatives to create measurable added value to the portfolio. So again, as part of our sort of prudent financial management of CIFCO over the next year, we are looking at how we manage some of our debt repayments moving forward. So over the last year, we have made 100% debt repayments to the councils. However, as you've seen, we have seen some impact in our rent collection and our arrears, and that has had an impact on CIFCO, with approximately 10% of our income being impacted. So typically, the councils receive over 80% of CIFCO's gross income in terms of debt repayments and recharges. So you can see that that would potentially create some cash flow challenges, particularly with the CIFCO running costs that we have at around about 17%. So we're aware of these potential short-term cash flow implications and are looking to be prudent in terms of managing our debt repayment. So CIFCO is proposing that we defer between 6 and 13% of debt repayments for up to the next 3 years, and that in effect an additional late payment penalty interest will be payable by CIFCO of around about £55,000 if that full facility is taken advantage of. And in effect, the deferred interest will all be repaid or added to the total debt at the end of the 3rd year. CIFCO's intention, however, is that if the business is able to make full repayments, it will do so. So, for instance, we are due to make our next debt repayment in June, and we are anticipating that a full debt repayment will be made at that point. The provision here is to be prudent and ensure that we have appropriate arrangements in place should we not be able to make those full repayments at any point. And just to qualify that in the event that CIFCO did make a reduced or deferred payment, the council would still be able to make its full debt repayment commitments and would also still receive a surplus on top of those debt costs as well. This table again is in the council reports that have been submitted and is probably familiar to you in terms of format that we have been using for the last few years now. In effect, this table shows the cumulative income received from CIFCO to the councils, but broken down by councils. So you can see that, for instance, Babergh has received 2.94 million of interest payments after costs over the period of CIFCO's lifetime, with an additional £100,000 worth of recharges, so bringing that up to 3 million, whereas Mid-Suffolk has received 2.344 million after interest costs, again with a further £100,000 of recharges, bringing that up to 2.445 million. So the councils this year have benefited from approximately 2.29 million of net income after costs, and that's equivalent to about 13.6% of the council staff's costs. The amount that Babergh received, the 1.274 million, is equivalent to about 22% of council tax income, and Mid-Suffolk receiving around about £1 million, that was equivalent to about 16.7% of council tax income. So just to give you some context in terms of the net income that has been received. So moving on to CIFCO's accounts. CIFCO's accounts have been circulated to the committee. They were circulated last week. They are still draft accounts, but just in summary, they show a pre-tax book loss of circa 4.58 million, and that is made up of the acquisition costs of the properties that were acquired during this financial year, a adjustment in value of the portfolio of around 2.88%, which is around about 2.4 million, and some bad debt write-off that I mentioned earlier of around about 300,000. I have updated this slide with the updated figures. The report was originally drafted before we have this version of draft account, so there are some variances between the report and the presentation, but that's really just because the report was submitted a couple of weeks ago and these are the most up-to-date figures. Obviously the most up-to-date figures will be included in the council amounts. So the report showed a 4.4 million predicted loss as opposed to the 4.58 million here. So just moving on in terms of CIFCO capital and income really. So since 2017 through to March 2021, CIFCO has accumulated some capital losses, and these are around about 12.5 million and are made up primarily of the acquisition costs, so stamp duty fees, etc., when acquiring the assets, as well as a reduction in value of around about 7 million. On the from an income perspective, if you look at it in a cumulative way, that we've seen rental income of £9 million. We've repaid 7.3 million to the council, and there's been net income to the councils of 5.5 million. And so whilst there has been a reduction in the value of the portfolio, this is not unexpected. Property values do fluctuate over time, and within our portfolio we have seen some individual properties increase in value and others decrease, and particularly in the last 12 months the assets that have been most affected by value have been in the sort of retail or leisure sectors, as you would expect with the effect of the pandemic. And I will just hand over to Neville, who can perhaps just give some broader context to the property market so that we can consider those figures in the round, I suppose.
Thank you. Could I just ask Neville, the presentation you gave before and what you're about to give us, is that information all in one of the appendices to to our committee report, or is it extra to that?
Chair, if you don't mind if I answer that question. So the slides that Neville delivered originally, all of that information is within the business plan, and there's a section about market performance within the business plan. However, Neville has updated that information so that the slide information is perhaps more current, because again that information was provided previously in order to submit the report. These tables aren't within the report currently, but we can consider adding them to the council report if the Committee of Overview and Scrutiny find them useful. We could certainly look to add those in time for full council.
Thank you. This is just taking a bit of a long-term view on the property markets. And fundamentally, CIFCO is a fund which is put together to provide an ongoing, relatively stable income stream for the councils. When one's looking at property, then you're looking at total returns, but the total returns are made up of two factors. There's the income, which is the rent, and the capital growth, which largely stems from the value increasing over time and rental values increasing. The key thing about income is that it's contractual. It's derived from leases, so the tenants are responsible to pay that income, and that should come forwards. The rental levels over time obviously increase along with that. When you have values, then they will inevitably fluctuate up and down along with the economy. And there's a 40-year graph on the sheet which shows obviously the recessions in the 1990s and the global financial crash 2008 are the low points. But across the last 40 years, then we've been generally in positive territory. And during that period, not only have the capital growth been positive, but what you'll see is the income return obviously is positive all the way through. So going forwards, we are, as they say, past performance is not necessarily a guarantee of the future, but certainly income streams are relatively predictable, they're contractual, and as far as the last 40 years are concerned, then they have remained relatively stable. And if we move on to the next slide, then that's a fairly interesting graph as well, because there we have the all property equivalent yield, which is the average income in effect over the last 40 years, tracked against the 10-year government bond yield. Again, you can see the capital values have wavered up and down as time has gone through, but the income return has been comparatively steady, around about 7.5% in the early 1980s, now about 5.5%, but that's in line with lower returns on all investment assets, and in effect also shows an increase in value, because the lower the return, then the greater the value in general. So fundamentally, just looking through these graphs, then we've taken a 40-year view, and what we can see out of that is that as a long-term asset, property has performed well in terms of producing income streams.
Thank you, Noel. So really, just a final slide, conclusions. This business plan provides a framework to manage the portfolio going forward. As you said earlier, this is an important time in the evolution of CIFCO. We now have a completed portfolio. And to reflect that, the KPIs have been amended and provide a framework to monitor the company's performance. And that change reflects the completion of the acquisition. We've ended up with a well-balanced portfolio, diversified risks across sector, location and tenant, and that could not have been really more fundamentally tested than it has been over the last 18 months. And I hope you've seen from the summary we've given you that the portfolio has held up remarkably well. We've maintained our debt repayments. It's continued to provide very good income for the council. The council are our shareholders. And that is going to be the focus of the board over the next year, is looking at how we can improve that income stream, but also how we can start to work on values, improve the values of some of the assets where they have lost values. Obviously, the valuation in March of this year was at a time when the market was extremely hard hit. Some units were vacant, and they have now been re-let. And those will be reflected in the valuations next year, and I hope very much that we'll be looking at an increased valuation at that time. But I would commend the business plan to the committee. I hope we'll be able to approve it, but obviously we are here, we have the team here to answer any questions that you may have.
Thank you very much. I'm going to read out the question from Mr. Roger Young. I think I confused members by saying that Councillor Grandon's question related to this item. It does in fact relate to item 9, so I won't be reading that out obviously. But the question from Mr. Roger Young is, why was it necessary for CIFCO Capital Limited to allocate 983,269 new shares on the 20th of January 2021 to each shareholder, that's Babergh District Council Holdings and Mid Suffolk District Council Holdings, when and where were Babergh District Councillors informed and subsequently agreed to such action? So, is there somebody who could answer that question, please? Thank you, Emily.
Thank you, Chair. Shares are allocated to the shareholders on the acquisition of new assets by CIFCO, and these shares represent the equity element that is invested by shareholders and was agreed as part of the initial setting up of CIFCO. So due to the process that's involved in allocating these shares, they're often grouped together where there are a group of acquisitions happening all at a similar time, and then issued in one group, or normally across the period of a year we may have probably 2 or 3 share issues that will be made. So it's part of the process that has been in place since CIFCO was set up, and is really there to ensure that the equity is appropriately protected, the shareholders' equity is appropriately protected and recorded within the company's administration.
Have you answered the question, when were councillors involved?
Yes, I have. So that was part of the process that was agreed when CIFCO was set up,
right,
when it was agreed that 10% of the value of the assets would be invested by way of equity, and that equity would be recorded in shares effectively, because there are 2 shareholders. So it needed to be recorded formally by way of issuing shares. So there's a process that has been in place since 2017 in order to record these share issues. And if you look back on Companies House, you will see there have been a number of these issues that have been followed in this same process.
Thank you. And the supplementary question, why has a resolution dated 27th of September 2019 giving authority to the CIFCO Capital Limited directors to allot shares and signed on behalf of Babergh District Council Suffolk Holdings Limited only just been registered some 20 months late, or 20 months later, I guess that should be?
Thank you, Chair. So this was sent to Companies House at the time of the agreement. Unfortunately, Companies House failed to register the notice. CIFCO's lawyers actually picked this up when undertaking some company housekeeping, and therefore reissued the resolution to Companies House so that it could be formally recorded. So unfortunately it does appear that it was a Companies House error, which we have rectified, hence it being recorded at a later date.
Thank you very much. Now, members, this is your opportunity to ask questions. Do I have somebody? Councillor Dawson.
Yes, if I could just ask what the value of the allocated shares was then at the time.
Thank you.
Following up from Mr. Young's question.
So the shares are represent 10% of the value of the assets. So the four assets that were acquired at that time, the share issue is effectively, each share is £1, and so it's 10% of the total acquisition costs.
Thank you.
Thank you very much, Mr. Chairman. In regards to the lack of opportunistic assets in the portfolio, are there any restrictions that we've got? We're concentrating in the east. We've not got that much in the northern cities. We've got a Nottingham asset. Is there any way that we can look further afield and get those opportunistic assets, because I think they're really important for the that portfolio to balance that risk?
Yes, I mean, as I said, we haven't bought any of those opportunistic assets. We do now have a portfolio. We can't borrow further funds because of the Public Works Loan Board regulations. But obviously what we will be doing with the portfolio as we go forward is looking at the value of assets, looking at where they are in their value curve, and there may be opportunities going forward for us to sell an asset because we think we've added as much value to it as we can, and therefore perhaps, and there may be other opportunities around. And what you're talking about there is the opportunistic type assets. There may be some of those in the future. That's certainly something we will be looking at, but I think it's probably fair to say that in the short term, we don't have an intention of selling any assets, but it is something that as a board we will review all the time. We'll be reviewing it with Jones Lang, our investment advisors, as well. But so in the future that certainly may happen.
Thank you. Part of the question was, have you looked at opportunities in the north? I think that there is something in the way that CIFCO was set up that might preclude investing in Yorkshire, Lancashire or wherever. Am I right?
So the investment guidelines were probably focused more on the southeast rather than nationally across the country. And so those guidelines were just that, guidelines, rather than kind of firm fixed laws. But we have focused our investment in the southeast, probably for, one, because that was what the guidelines said, but two, originally it was because that was where we felt there was better opportunities for us to acquire, and that has certainly been the case so far, whereas potentially some of the perhaps northern locations we may have seen some sort of higher yielding but riskier assets, and we certainly were more focused around developing a secure lower risk portfolio.
Thank you. Are you happy with that, Councillor Caston? Do I have any other questions? Councillor Scarf, please.
Thank you, Chair. Page 30, we talk about the debt repayments by CIFCO to the two councils, and the additional late payment interest calculated is 54,000, as you mentioned. At what level of interest is that calculated at? And is that set out in a predetermined way in terms of the governing rules of the companies, etc.? Perhaps you could give us some clarification on that. Thank you.
Thank you. So the loan agreement that we have with our shareholders sets out the interest rate, and it also sets out the sort of penalty interest rate should there be late payments. I might need to defer to my colleagues in the finance team, but my recollection is that it's 2% above the agreed interest rate for the main loan, and Twanda is just confirming that, so that's the interest rate for those deferred payments.
Councillor Barrett.
Oh, yes, it's coming. One of the things that obviously the CIFCO fund at sort of 5%, 5.6% return seems reasonable. But bear in mind the whole of the purpose of this operation is to generate income for the revenue generation of the councils. Are you happy that the net figure to the councils is 3.67? Because that seems very poor, bearing in mind the 50 million equity that they've put in, or liability that they have. To me, that doesn't sound like a particularly good deal, bearing in mind that so from a CIFCO point of view, I think the performance is quite good. I think bearing in mind the market. But overall, the bottom line surely is it's the income generation that is required by the councils to carry on funding the services that are required for our residents. A 50 million liability with a 3.76 for Babergh seems pretty poor to me.
I'm going to defer that question across to Catherine Steele as the Assistant Director for Finance for the Council, because I think actually it relates more to the Council's financial position rather than CIFCO's position. So if I hand over to Catherine.
Thank you, Emily. The 3.67 is actually slightly better than we anticipated when we set up CIFCO, because we charge interest at 5% to CIFCO on the loans that we give to the company. And at the time we set up CIFCO, we thought the borrowing cost might be about 2%. So we were looking at sort of a net 3% at that point in time. So the 3.67% margin that we've got at the moment is, as I say, slightly better than we anticipated. And obviously that has some impact on the, the borrowing costs that the council is incurring.
Thank you. Do you have a follow-up question, Councillor Barrett, or other questions?
No, clearly, I mean, if that's what was in the original document, but it just seems a very low figure to me when you consider if this, I know obviously with the restraints of the Public Works Loan Board, you're not allowed to borrow the money to put it into equities, which actually, had you put it into equities, would have been into 25%, but not able to do it. And actually, of course, not able to do it at all now with the Public Works Loan Board, of cutting off the finance stream for this type of borrowing. Is that correct?
Yes, the PWLB changed during 2021, so we're no longer able to access PWLB to do what they call debt for yield type investments, which is obviously what CIFCO is.
Bearing in mind that that is the case, and there is obviously very limited scope for increasing the fund, is it then the point that CIFCO could be downgraded to just be a holding company as opposed to a managed going forward an acquisition? Because obviously you're not going to be in a position to buy more unless you sell, and the current market doesn't look as if selling makes sense. So would it be prudent then to reduce the management costs of CIFCO to actually pair to be a holding as opposed to an acquisition type company?
So the management costs for CIFCO relate largely to the external advisors that we instruct, and that is to ensure that we get the best possible advice and protect the council's investments. So moving forward, we aren't anticipating acquisitions in the sort of short term, other than to complete those that are currently under offer. The board of CIFCO has reviewed how the portfolio should be managed, and is still of the view that it's important to protect the value of the council's investment in CIFCO by maintaining the current approach to portfolio and property management, and that actually to maintain the standard of management of the portfolio and of the properties, to do it in an alternative way, but to maintain that standard. We don't believe there would be any cost savings, so we still believe that we get very good value for money from our consultants like Jones Lang LaSalle. And actually during the pandemic, that's been even more important than in previous years, when it's been so important to have good relationships with our tenants and to actively manage those relationships rather than just, you know, waiting to see if the rent comes in or not. So I think particularly during these challenging times, you know, the value added by our consultants is really considerable. I don't know whether Chris wants to add anything further to that.
Yes, I mean, I agree absolutely entirely with that. And I think it's a misconception to think that when one owns a portfolio like this, it's right, this is just, we've got it now, we can hold it. There are tremendous opportunities for either increasing the value but also increasing the income as well. And that's extremely important, particularly at times as we're certainly not out of the pandemic. We'll continue to see some effects from the pandemic, so it's very, very important. But obviously, as Emmy has said, how we manage this moving it forward, it's something that we review all the time. It is very, very important that we manage the portfolio very carefully, have the relationship with the tenants. They're the people who pay the rent, which gives the assets the value. It's very important how we manage that moving forward. We've reviewed it and we think this is the best way, certainly for the moment, as to how we move forward with the portfolio.
Thank you. Councillor Maybury.
Thank you, Chairman. My question has got 3 parts. Is that okay? Thank you. You mentioned relettings at one point, and I know sometimes when a property has been void, there is quite often a period of perhaps up to 6 months that's given to a new tenant, which is free or much reduced rental. Can you tell me if we have been doing that, please?
Yes, certainly. So we've negotiated commercial deals with our new tenants, and in some circumstances there have been rent-free periods that have been agreed, and they've been appropriate to the market for those properties, and also any tenant fit-out works that the tenant may need to undertake for those premises. So yes, that's been a normal part of the reletting of those units.
Thank you for that answer. And would we have a figure of how much that's cost in lost rental, please?
No, I'd need to go away and have a look at that in terms of the total figure in relation to rent-free periods, but I'm more than happy to take that one away and have a look at it and come back to you.
Yes, please. I think that would be useful with the Chairman's
yes, thank you
authority.
very much.
Thank you.
Next
may
question.
I carry on? Thank you. You have highlighted quite a few refurbishments that vary in cost. One was quite large, over 400,000, without going through all the papers. Could you tell the committee how long you think that reinvestment in that would be returned by the rent? And I'm probably more interested in the larger refurbishment.
So the larger refurbishment that you're referring to is units 2 and 3 Pasadena Way in Harlow, where we had a tenant go into administration. Once we took the building back, we thought that there was an opportunity actually to replace the roof. It wasn't very energy efficient, it wasn't in the best repair, and we thought actually it's much better to undertake a substantial change to the building like that when the property is void. So the works are due to commence on site within the next couple of weeks, and will be completed, I think, within a 3 to 4 month period. We are also considering whether we can include additional solar panels onto the roof as well as part of that refurbishment work. In terms of the payback of that refurbishment, that was something that the board looked at quite closely at the time, to be able to demonstrate that it was really an investment, i.e. that you got a return on that investment. I'd need to check back at the figures to clarify exactly what that return was, But ultimately, the view of our advisors was that by undertaking this refurbishment, we would reduce the avoid period. So it would speed up the time that we find a tenant for this unit. And it would also improve the chances of us identifying a better quality tenant, because better quality tenants tend to want to have buildings that are in repair, and that we're likely to increase the lease length of that tenant as well, and that all of those factors would have a positive impact on the value of the asset at the end. So we're anticipating increasing the rent from memory from around about £7 per square foot up to about £10 per square foot, and that would have a similar impact on value. So does that help to give you some of the sort of justification behind that investment?
Yes, it does, thank you, but I would be interested in seeing the figures for that. It just brings to mind a little bit of a query about why there was the investment in that particular building at the time when it was recognised that the roof was in poor repair. But I'll leave that with you to reply with the figures. And my last point, if I may, Mr. Chairman, thank you, is you've talked about tenant engagement and lease events. Are they an extra cost to CIFCO, or are they not, please?
So tenant engagement is really about conversations with our tenants. That forms part of the contracts that we have in place with our managing agents and our fund managers. So there's no additional cost in relation to those conversations. In terms of lease events, those are things like rent reviews and lease renewals, and there will be additional costs in relation to those to reflect the transactions that are being undertaken. So normally a kind of percentage or a fixed rate fee. And we have included an allowance within our budgets moving forward for those additional professional costs.
Thank you very much.
Thank you. Anyone else with any questions? Right, well, oh, sorry. I'll need a wing mirror, I think. I'll take Councillor McLaren, and then Councillor Ekping-Yong, and then Councillor Gould, and then Councillor Scarf. So, Councillor McLaren, please.
I think it was a lot easier, Chairman, when we had a yellow hand to push. Can I just make at the outset, I have quite a few questions, but at the outset, can I just say that we had a very comprehensive presentation, but I, for one, really couldn't see some of that, and it would have been helpful, and I'm probably speaking for quite a few members of the committee, it would have been very helpful if we'd had some précis of that presentation in our hands so that we could have perhaps asked questions intelligently around that presentation. But I felt a lot of it was lost by the very fact we couldn't see it. But that's just an observation. Thank you, Chairman. Can I refer to the papers? And I want to refer to page 33 in the document that the committee had, or have, sorry. And perhaps I could have an explanation. I'm not sure who's going to answer this. 17.3, could you just explain to me about the phrase repairing their own demises?
Certainly. So just in regard to the presentation, obviously we prepared the presentation probably on the assumption that it was going to be a virtual presentation, which would have meant you would have all had the presentation on your screens in front of you. So apologies if it was difficult to read in this environment. And I'm more than happy to circulate the presentation afterwards if that would be of assistance. In reality, most of the presentation is actually within the documents that we provided. There is very little new information. Really, the purpose of the presentation was just to try to highlight some of the key aspects So it wasn't really to provide additional information, but I'm more than happy to do that.
Thank you.
In relation to your question regarding 17.3, so this really relates to what we call sort of full repairing and insuring terms. So the majority of our tenants have leases which require them to maintain their properties. So it's entirely at their cost and expense to maintain their properties. And so that's what we're referring to when we're talking about, in 17.3, we're talking about our approach towards sustainability and how much influence we can have on the sustainability of our portfolio. Because if 97% of the portfolio is let on fully repairing and insuring leases, then actually that sustainability point sits largely with the tenants rather than as the landlord. But what we're identifying as CIFCO is that there are lease events that occur. We do get properties back to us. And in those situations, we want to try to do what we can to improve the sustainability of those individual units. We're also keen to talk to our tenants. So they will come forward to us and say, actually, we're planning to do X, Y, and Z. Are you happy to approve that? And we'd like to be in a position where we can have conversations with them and say, yes, have you thought about also adding these other components in which will help with the sustainability of the building? So that's where it's important that we have those relationships with tenants, because actually in the majority of cases it's the tenant's responsibility to repair the buildings, and that's part of the contractual arrangements we have in place. But it doesn't mean that there couldn't be conversations to perhaps try and influence them to take more sustainable steps where possible. We're also looking at other things in terms of moving forward, so how we can add in kind of green lease clauses within our standard leases where we have lease renewals as well. So it's a kind of bigger picture in terms of how we can start to address and improve the sustainability of our portfolio.
Emily, it actually was about the word demises. It was, is that a professional word for property?
Yes, so within a lease you will have a demise, and your demise is the property basically.
Thank you.
So that's what that relates
it's
to.
just read difficult, read slightly. I did look it up in the dictionary actually, but I couldn't find an answer to that.
Apologies, property jargon.
Thank you. I'd like to ask a question of Catherine, the Section 151 officer, if that's all right, Catherine. The KPIs are obviously very important that the CIFCO meet those. In your professional opinion, as the other side of the business of CIFCO, do you think these measures, these KPI measures, are appropriate, or would you ever consider asking for a change in those?
I'm afraid my professional opinion doesn't extend to property, hence we've got all the professionals sitting down the end there. But from a sort of financial perspective for the two councils, I'm comfortable with what is being proposed at the moment. So in terms of, the loans that we're lending to CIFCO and the income that we are receiving back from CIFCO into the council's finances. So I'm comfortable from that perspective, yes.
And another question to you. Is the business plan, do you think the business plan is appropriate for the next 12 months?
Again, from the financial perspective, yes, I believe it is. Yeah.
Thank you very much. I've just one final question, Chair. In last week, we understood that the council was now legally allowed to chase bad debt. At what time or what period will CIFCO be allowed to chase bad debts?
So the government moratorium on chasing debt was extended until next June. So the normal practices that landlords would use in order to encourage payment have been suspended. So we're unable to enter into a sort of legal process to recover debts. and that's the position until this time next year. What the government has said is that tenants, where they can pay the rent, should pay the rent, and they have added a sort of arbitration element into progressing those discussions, so that should we need to go to arbitration, we can do. But we're unlikely to return to sort of normal practices for probably another 12 months or so, and that has been the case throughout the pandemic. And I think it's worth reflecting on the fact that actually we haven't had the normal measures in place to pursue our debts, and the fact that actually we have mitigated what our arrears have been, and that's been largely through a kind of negotiated approach with tenants and having those conversations. So we'd look to continue to do that, and you know, we'll use the other options available to us as we need to, but always start with a conversation first.
Thank you, Emily. Thank you, Chair.
Thank you. Councillor Ekpignon, please.
Thank you, Mr. Chairman. We can see on page 19 of the report that the weighted average unexpired lease term is approximately 8.5 years. And we then see on page 22 that one of the strategic objectives for the next year is the monitoring of markets for opportunities to enhance value and income, / maintain asset liquidity. And I'm just wondering how these two things actually sit together, and our weighted average unexpired lease term, how that compares with the industry average. And would we want to be having a longer weighted average unexpired lease term or a shorter one from a liquidity point of view?
So I think probably it's a question for three of us to add our thoughts on. So the WULT, the weighted unexpired lease term, it reflects the tenant commitments. So it's the lease lengths across our portfolio. Liquidity, from my perspective, is your ability to trade those assets. So in many respects, the longer the lease term, probably in the current time, the more attractive the assets are within the marketplace, and therefore the more liquid they are. So I think you know, that's the sort of dynamic or relationship between WULT and liquidity. There are opportunities with shorter lease terms as well, in that we can renegotiate terms. Certainly on some of our estates where we've got shorter leases, we have seen those leases renegotiated, and we've seen some rental growth and subsequently capital growth as well. So in terms of what's an appropriate WULT, we're comfortable at the level that we've got currently, because we've got some shorter term leases and some longer term leases, and it's really about looking at the balance of risk in that regard. So I don't know whether Chris would like to add anything.
Yes, just to say, I mean, Emily's absolutely right. So there are some assets where the WULT is relatively short. And for instance, if you've got an industrial estate with a number of tenants where there is some rental growth which can be brought in by reviews or new leases, and actually you want a reasonably short WULT with some of them, because it gives you an opportunity, it gives you the flexibility to add value, increase the rental income. So it's getting the right balance in terms of WULT over the whole portfolio. We are happy with what we've got at the moment. There are certain assets big assets where when leases start to come towards an end, then obviously that's exactly when we'll be having discussions with occupiers to make sure that we can extend the leases or whatever is appropriate. Neville, I don't know whether you have anything to add to that.
Yes, just to say that I suppose 30 years ago the market was more used to longer leases, and it wouldn't be uncommon for leases to sign up to a even 25-year term. Now that is not the case. Tenants tend to be much more fleet of foot, and they expect to sign up for generally 10 years in most properties. occasionally with a break, perhaps 5 years or something of that kind. So having a WALT of 8 years is actually quite good in the context of leases, which is generally in the order of 10 years. And as Chris says, there are certain circumstances, such as an industrial estate, where it's actually quite good to have an expiry on occasions, because if there's competition to let up that unit, you're setting a new rental tone, which can then be imposed on the other tenants when their rent reviews come around. And sometimes you need to have that opportunity to go in there and prove where the open market rents are within that estate, and thereby demonstrate to the other tenants that that's the tone which they would be expected to pay.
Councillor Gould, please.
Thank you, Chair. I think in part you've answered my question as part of an answer to Councillor McLaren's question. It's around sustainability and it's around the green initiatives. And I picked up, I think, that you were saying that some of it is down to the tenants if they're doing repairs to see to it themselves almost. And at the moment, it seems to me we've just got the EPC as a target that we can watch. Are there any other rock-solid targets that we can timescale, that we can measure, that we can use for the sustainability bit, really?
We had quite a lot of debate around a sustainability target, both with the board and with our consultants. So the board were very keen to have a target, but there probably aren't any sort of industry recognised targets for property portfolios currently. And so EPCs are required for all properties, so that data is available. Other potential ways of measuring kind of carbon impact, we don't have that information or data universally available. So the view of the board and our advisors was that whilst we don't think the EPC approach is necessarily the best one, currently it probably is the only option to us. But we believe that there will be more development in this area, and that's why we were really conscious of saying this is what we're going to use as our target this year. It might not be the right target next year, because actually the market may have moved on. The industry might have some more standard targets that we can benchmark against, and actually we'd like to keep that under review so that we do have the right sustainability targets moving forward. But we didn't want to not have a target because there wasn't an industry standard at this point in time. So we've created a target which hopefully we'll be able to track our performance in that space, and we'll look to see whether there are more applicable or better targets that we can use in the future.
I mean, it's very much work in progress at the moment. I think it's really over the last 5 years is where we've seen the focus, particularly from occupiers and therefore from investors, onto the sustainability of the portfolio. And so it's an evolving business, and we've looked at it quite hard. We're continuing to look at it, and as Emily says, I hope that next year we may come back and say, actually, we've got a much better way of measuring this. And as we've said before, a lot of the properties are out of our control, but then there may be opportunities in the future, and that may be something which we come to discuss with our shareholders, as whether we should be perhaps investing alongside some of our occupiers to encourage them to be more sustainable in perhaps some of the works which they're required to do. That's probably not something which we can do at this stage until we fully get through the effects of the pandemic and everything else, but that may be something we can consider in the future.
Can I just follow up, Mr. Chair? And presumably sharing best practice with other companies with similar ways of working is something that you would do anyway?
Yes, absolutely, and that's part of the, or one of the benefits of working with Jones Lang LaSalle, because obviously they're market leaders. They have a sustainability department who we link into as well and get the benefits of their advice. And so we are at the kind of, I suppose, the forefront of this sort of changing model. And we obviously take full advantage of the consultants' advice that we have available to us.
Thank you. Next I have Councillor Scarf, please.
Thank you, Chair. Well, interestingly enough, Councillor McLaren and Councillor McGould raised some of the points I was going to ask about, and in fact Chris actually, in his final statement, actually answered one of them as well, so I don't have any further questions as such.
Thank you. Councillor Maybury, you've got a further question, I believe.
Yes, thank you, Chairman. I appreciate very much all the directors being here today, and it's just for a matter of clarification. I note Mark Sargentson is not here. I'm assuming he is still a director and that nothing has changed. Thank you.
Yes, Mark Sargentson is still a director. Unfortunately, he was on holiday today, so was unable to attend. I'm sure he will attend full council and will be very keen to, but yes, no change there.
Thank you.
Do I have any further questions for clarity, please? I've just got a couple. One is about the management fee. You've said a couple of times, is it 17% or 17.5%? But am I right if you said a percentage?
No, so I referred to 17% as broadly the costs of running CIFCO, so that's not the management fee.
Okay, no, that's fine. Well, I'll stick with the 17.5% rather than talk about the management fee. Is that based on the current value, or is it based on the original £100 million?
Neither. It's based on income.
Right.
So it's roughly 17% of CIFCO's income is used to cover the costs of running CIFCO.
Yeah, that's really helpful. Thank you. That was a totally different figure, isn't it? Thank you. The shortfall in the repayment, has that been discussed with the holding companies? Are they aware that this is on the horizon? And when will it fully be repaid?
So the holding companies have had a copy of the business plan, which includes this proposal within the business plan. So yes, the holding companies are aware of it, and they have excuse me, approved it as part of the business plan process. The repayment is proposed at the end of the 3 years, either in full or by adding to the capital that is outstanding.
So complete in three years?
So, yes, so repaid by the end of the 3 years or added to the debt effectively if that isn't possible.
Thank you. Are there no other questions? In that case, we enter into debate. Who would like to start the debate, please? Councillor Caston.
Yeah, I'd like to thank everyone here for a really good, detailed piece of work, and it does show that we have had issues with COVID and everything. It's actually in a much better place than I thought it would be after those. So yeah, I'd like to say yes, this is a good piece of work. I feel like I've had all the information in front of me that I need, and thank you very much.
Anyone else? If there's no debate, we'll need to look for a recommendation, a proposal, a seconder, and so on. Can I just make one comment? It doesn't need to be in a recommendation or a motion or a proposal or anything. I'll just make this point and I'll come straight to you. And that is, as Councillor McLaren said, it was at times difficult to follow the presentation, and it would be useful if, and it's almost impossible from here unless I turn round and turn my back to you. So it would be useful to make sure that everything that you are going to refer to is highlighted by the speaker. So if you are going to talk to a particular table on a particular page, it would be useful to know that. That will make it easier for council. And if there are any slides that you're going to show which need to be updated, that we have a chance to see those as we arrive. The COVID slide was very, very helpful, but I couldn't see it. So we need to find a way to make sure that everybody can see the same stuff and can refer to the same stuff. So if we can find a way of doing that, that would be really helpful. Thank you. Councillor Barrett.
In the absence of any debate, I suggest we just put it through for approval because I can't see much point discussing. I think the question and answer session was quite comprehensive and I think most things were probably covered by that. I can't see the point of us debating stuff that we've already got the answers for. So if I can get a second, let's move on.
Councillor Ekping-Young.
Thank you, Mr. Chairman. I assume that actually what we need to be considering are the recommendations on page 17, aren't they? So if that's what Councillor Barrett is proposing, then I'm happy to second.
Yeah. Are you happy just to propose and second those as they stand without any sort of corollary or any addition? If that's the case, then Henriette.
I am very sorry, but I'm going to have to intervene here and say that actually those recommendations in this report are for council. So this committee will have to make their own recommendation. We can make a very simple recommendation saying that the Joint Overview and Scrutiny Committee endorses the recommendation, endorses the business plan to the council.
That's absolutely right. Councillor Ekping-Young.
So, Chair, in the light of that comment, then the recommendation would be that we go forward with the recommendations. It seems a bit torturous.
I don't want to put words in anybody's mouths, but instead of the council notes, CIFCO, trading activity and so on, this committee notes, and then instead of the council approves, do you want to recommend that the council approves?
Indeed. This is total bureaucracy. So we'll just approve it, they'll approve it, and then it all goes whoopee. God dear.
Thank you, Chair. Actually, on page 15, 1.2, it does say that the Joint Overview and Scrutiny Committee is asked to consider the following, and I think the 4 points there could be the basis of your recommendations for approval.
So would people like to, would the committee like to look for that then, page 15?
Course of that, Chairman, I think we've seen those areas and they've been discussed, haven't they? All 4 points. KPIs have been discussed. We've said they're up to standard. The business plan is robust. I think we've agreed that. Is there sufficient confidence in the management of CIFCO? Are we in a position to really question it? I think they're probably quite good managers. So on the basis of that, let's move forward, shall we?
Yes, but we do need a proposal and a seconder, and we can either go through all of those four, or we can merely, as I think you've suggested,
we take the 1.2 en bloc, and that we have investigated them, and we are satisfied that they've all been met, and that we can recommend those to full council.
So we've got a proposal and a second. I think we need to write that out in some way so that it is a recommendation to council, but we can do that. We consider that the current performance of CIFCO delivers good value to the councils. We consider that the KPIs are appropriate. We consider that the business plan is robust, and What did you want to do about, Councillor Barrett, what did you want to do about the sufficient confidence?
I know, I mean, clearly we have sufficient confidence in this current management structure. Well, I'm putting words in my fellow members' mouths, but I assume no one's dissenting from that.
So, in reality, what you're proposing, Councillor Barrett, is that we recommend, or we consider that and recommend.
Basically, what we have done, we've looked at the questions, and we've sufficiently happy that all those have been met and are not requiring any further investigation. I mean, basically, we are happy with what has been presented.
Can I just ask the governance officer if she has enough information in order to type something out into the...
It doesn't actually need to be very complicated.
No.
Yes, Chair, I have that the Joint Overview and Scrutiny Committee have considered the points made in bullet points 1.2 and that the committee is satisfied that the business plan is robust for 2021-22.
Councillor Barrett, Councillor Eckby, are you content with what has just been read out?
Yes, I am, Chair.
Yeah.
Thank you. So,
we are.
Thank you very much. So, if we just await the governance officer putting that into the voting, and then when it's there, we will have an opportunity to vote. Thank you.
Chair, the voting actually just states that the recommendation as read by the committee clerk. I'm happy to read the recommendation again should the member wish so.
Are you content that we've had it read enough times that we're now in a position to vote? Yeah. Okay. Thank you.
So, members, the vote is now in progress in your app. You might need to scroll down to the blue line. Councillor Mabry, may I take your vote, please?
Yes.
Councillor Dawson?
It's a bit, my system's stuck here, so I'm 4.
4, that's fine. Thank you very much, Councillor Dawson. Chair, that is 10 votes for and 1 abstention.
Thank you very much.
Mr. Chairman, could I just have Emily Attek's confirmation that those questions that I asked for, the figures would be forthcoming, please? Thank you. Thank you, Mr. Chairman.
Certainly, Councillor Mabry. I'll send them to you this afternoon if at all
Thank
possible.
you.
Thank you. So I believe we're now at a point where it's all changed and we're going to adjourn the meeting whilst some people who are attending can leave and others not yet here will arrive. And if we can be back in 10 minutes, 14 minutes, 12:30, and then we'll discuss item 9. Thank you. Councillors, can we please get together and move on to item 9? To start off with, I'd like to invite Cassandra Clements, the Assistant Director for Environment and Commercial Partnerships, to introduce the report on the scrutiny of the review of the joint parking strategy, the process and the timeline, please.
Good afternoon, councillors. Thank you very much for having us here today and for looking at this report for us. So this report is for both councils. It is around the methodology and the process for how we would like to take on the project of creating a parking strategy for both Babergh and Mid-Suffolk councils. So just as a, I know you've seen and had debates about this before, but just as a slight recap, the joint parking strategy is due to look at what's going to happen within our districts within the next 5 to 10 years, the growth in terms of residential, in terms of businesses, tourism, and it's very much about what we anticipate the needs of the districts being. We would like it to cover both on-street and off-street, so obviously we know that we don't have direct responsibility around on-street, that is the Highway Authority within Suffolk County Council. However, you know your districts best, we know our district best, and I would like us to work in much closer partnership with Suffolk County Council in terms of what happens to on-street parking, particularly with new developments growing as fast as they are in both of the districts. So I would like our strategies to be able to help them inform what should be happening in the districts, as well as assisting our planning department when proposals come through to them. There's just been one change, Chair, if I could say, since the report has been published. So we've been talking to external consultants about who deal with consultations for parking surveys particularly. There's a number of consultants out there. So when this report was first drafted, the timeline was based on officers doing that work, which is why you'll see it's quite lengthy. However, it seems that there are very competent consultants out there that have done this, many for other councils, that are on frameworks that we can use. So having some brief conversations with those, it looks like there's a number of things that could happen in conjunction because their teams are fairly significant, that they can take on different parts at the same time. So the timeline is improved through till it would conclude in probably summer next year as opposed to December next year. So it's around a 3 month at least off of that timeline. So today really was for Overview and Scrutiny to talk to us about how they feel this process looks to you, whether you feel it has the right level of consultation. Just to add that the consultation we propose is both face-to-face, clearly COVID rules allowing, and social distancing in place, and virtual as well as online. So there will be different mediums for everybody to be able to take part. The face-to-face could include parish and town council meetings. It can include engaging with people using our car parks, that kind of thing. Stalls, whether there's fetes or village events that we can go to, those kind of things to try and engage with as wider spread of people as possible. Thank you, Chair.
Thank you. Could I ask if you're going to trim, say, 4 or 5 months off the timeline, where you're going to gain that? Because there's committee, cabinet, and council processes at the start and the finish. They can't be altered, I guess. So you've got to. It's just the bit in the middle that's going to be chopped short. Is that feasible?
That's right. So essentially the governance process at the start and the end, this is the start of the beginning, the first governance process. So this will stay exactly the same. We're still due to go to Cabinet with this before we start. And it is the desktop exercise and the data gathering and the consultation by theme bits that will all be done consecutively now as opposed to separately. So you'll see that they ran on after each other. The desktop exercise was August to October, then data gathering October to May, whereas actually those two things can run simultaneously.
And there'll be no hold up in employing a consultant to start quite soon.
No, so we did some soft testing with some consultants. They all know the deadline to start the work is very quickly, and the ones that are on our framework are all available to do that.
So it looks as if they would be starting in August.
That's correct.
Thank you. Members, have you got any questions for clarity? Councillor Muller first, and then Councillor Epingham, and then Councillor Maybury.
Yeah, thank you very much, Cassandra. One of the points I actually wanted to raise, I do welcome this, so thank you for that, is that I understand the Department of Transport are bringing in legislation later this year to ban parking on pavements. How can this be brought into this study? Because I know from speaking to residents, this is a major, major issue, probably certainly some of my colleagues in Stowmarket and elsewhere as well, and I think it's really, really important that we perhaps consider this as well. Thank you. Thank you, Chair.
Thank you, Mr. Chairman. But I have two questions, in fact, Cassandra. First of all, as you well know, we have serious issues with on-street parking in Stowmarket. And we've had numerous conversations with you about that and have had some temporary relief. My concern is that I'm not clear about how this strategy exercise is going to address that. I have a concern about how the Highways Authority are going to respond, because sadly my experience is that they're very poor at dealing with issues to do with on-street parking. And as you well know, we have an increasing demand from residents for a residential parking permit system. And sadly, this particular point is one that keeps getting bounced around, with no one really seeming to want to take ownership of that and drive it forward. And I would hope that as a consequence of this piece of work that you're undertaking, that will be a key element that is taken forward. I appreciate your comment about the work that you can do to reduce the timescale for this, but I am still entirely flabbergasted by the fact that the final drafting, cabinet discussion, that's all going to take an entire 6 months. I mean, when we're talking about a medium-term strategy, which is in the 5-year period, we're going to use up 20% of the time talking about it. So, I'm more interested in the actions that we're going to take to ameliorate the situation.
Thank you. Councillor Maybury, please.
Thank you, Mr. Chairman. You caught me on the hop nearly there. Because I am slightly pedantic, I have 2 public document packs because my computer will not let me into this meeting whatsoever. And in them, I have 3 different ways of putting this joint area management parking plan, or a joint area management parking plan. So which one is it, please? I have 3 different ways of it being talked about and the initials put down. So what are we talking about?
So the Joint Area Parking Management Plan is something that was published at the end of 2019. So that's a document that we've referred to that sets out basic principles for both of the districts around things that we would expect to see. So that's what's referred to as a background document in the report. So this is specifically about the generation of a joint parking strategy, ideally, but it can be we can do separate ones as well. So this is specifically about a parking strategy.
So it's joint area parking management plan in 1.1. Right, okay, fine. The most interesting point of all of this is my own ward in Lavenham, who have their own parking facilities. They have their own idea of what parking should be like. And recently, if no one else is aware of it, there's been absolute uproar within the village because there was a suggestion that parking should be altered in the very centre of Lavenham. The issues with this is County Council, they are trying at the moment to have an agreement with the County Council that the speed limit will be reduced to 20 miles per hour. The other part is that somewhere Babergh holds a document, and neither you nor Cathy Orbiton have been able to find it for me at the moment. There is a document that Babergh produced which states that within Lavenham there are specific areas of pavement with brick sets in, S-E-T-T-S, and there they can actually park on it. So does this mean that all of this will completely make the local village parking strategy null and void, please?
Yeah, carry on, thank you.
Apologies, glasses and masks don't mix, do they? So just to answer the latter question there, Councillor Maybury, so anything to do with the on-street parking is not within the responsibility of the District Council, it is with the Suffolk Highways Authority. So if there are changes that they're looking to make, then we can certainly give our opinion on them and try and lobby them for what we think needs to happen. But in terms of the teeth, I guess, for this document, this would be setting out our stall in terms of what we would want for Lavenham. And that's then for us to use, have those conversations off the back of that strategy with Suffolk County Council. So I'm hoping it gives residents more of a voice, that certainly through this consultation, that we will be able to provide that kind of data and those kind of responses to Suffolk on particular issues that are quite specific like that are going on in our villages.
At the moment, and I know this is just an outline of how you propose to do this, but I can't actually seeing it aligning with Lavenham when they actually have the lease of the car park. This is off-street car parking, but some of the on-street car parking as well, where it is designated. So I'm going to flag that up straight away, and I am going to support my ward, and in particular Lavenham, for this.
Of course, and just to clarify, Chair, if I may, so in terms of any conversations with town and parish councils about devolution of assets, so in particular Lavenham, the car park, you will know that they're interested in taking that on. This strategy would not take any of that off the table. I think that's quite an important thing that both cabinets have said that they're interested in devolving assets. So none of those discussions are off the table through this strategy.
Can I just ask a fairly general question? So this strategy that you're going to develop is going to be really detailed. It's going to be almost at street level. It's not the sort of strategy that we discussed a couple of years ago. It's a completely different beast.
So what I'd like to do is have a nice, clear, short, concise strategy that talks about what we want to, backed up by real data, and then the data be available for people. So I don't intend to have, I can imagine this being a number of appendices, for instance, that happen that are quite detailed around each place. But in terms of the principles of the strategy, I'd like that to be very user-friendly, very reader-friendly, that anybody could download it, click on the website, read it and understand what they should get from our councils, but with the data there in a presentable format that we can use if we need to. So we have got specifics around each place. One of the things that I would really like to see happen, and actually it's Councillor Ekpignong's point around the specifics of what's going on in our towns, is that I think especially our larger towns, Stowmarket, Hadley, Sudbury, are well overdue a review by Suffolk County Council on the appropriateness of the traffic regulation orders that are in place. I would very much like to see through this work, not after it's produced, but during it, that we start pushing Suffolk County Council to start doing those reviews. I think then there's a conversation between the Highway Authority and the districts about the cost of those and the implementation. I'm sure there's some shared options available, but that's what needs to happen. Those things haven't happened for a long time, and both districts have seen significant growth. So I think we really do need to take this opportunity to get down to, like you say, street level, to try and make some differences.
Thank you very much. I'm now going to read two questions that have been asked by Councillor Grandin, who's not able to be here. She says, I did not see community groups specifically mentioned in the paper, and I need to ensure that there is specific provision made for such groups when the new parking regime enters into force. A lot of community groups in Hadley use the car parks to attend their community meetings, for example, groups associated with dementia and their carers. Some of these meetings last almost all day and take place currently pre-COVID at the Hadley Leisure Centre and Ansell Centre. Currently, one of these groups already has an arrangement with Babergh that they can display special tickets in their window to extend free parking beyond 3 hours without incurring a fine, and I've lodged a request with another group to do the same. Such groups need to be specifically catered for in the future, and there needs to be considered in the paper. So can you undertake to talk to voluntary groups? And her second question is, it was agreed that charging would only be introduced on the 1st of October at the earliest. What are going to be the trigger points for the start date? Will there be economic and other tests?
Thank you, Chair. So on the first point about liaising with community groups, we're very happy to do that. You're absolutely right, on the bullet point list, it's not specifically listed there, but that is not limited to those bullet points. So we'll absolutely work with our communities officers and with members to make sure that we have all of the groups that we need to talk to. And I totally agree, you know, we are out there actively supporting community groups to get started and to work within communities, so we need to make sure there's some infrastructure there that helps them. So very much expect to have their say in this. I think the short-term parking charges in Babergh are possibly slightly off-piste, but I'm very happy to answer the question anyway. So absolutely right, Councillor Grandin has said it was no sooner than October, and Cabinet are going to make a decision around whether that's the date that we still go for. We were very much looking at the government's roadmap as to how things happened. Of course, that's been extended by another month now, so I think we need to see where we're at the end of that roadmap to see whether it's an appropriate time to continue with that piece of work.
Thank you very much. Any other member? Councillor Dawson.
Yes, I've got a couple of questions. This is the first I'd heard about it being outsourced. Can you just clarify exactly what the total cost is going to be of this consultation, and what the cost is predicted to now outsource it if we don't presumably have the expertise internally? I mean, what is the reason for outsourcing? Is it? I'm slightly concerned that we might be doing it because we want to avoid any issues with officers, such as what happened with the licensing.
Of course, so a couple of reasons really for outsourcing. One was the timeline. I think we were always uncomfortable with how long it was taken. As you know, there are no parking staff in Babergh or Mid Suffolk, so West Suffolk and Ipswich do parking enforcement on our behalf, and there's no other parking staff in the team. So amongst the admin support and the corporate managers that I've got, we would have had to share that across them, so kind of taken them off of their normal day jobs to be able to do this, hence why the timeline was so long. So that was one of the reasons, in that the amount of officer time it would take away from what their normal responsibilities are seemed too much, to be fair. Then once we started talking to our colleagues, other colleagues have used consultants for consultations successfully. So we looked at that as a method, started talking to some consultants, and actually it became very clear very quickly that they could do a better quality job because they're experts and we're not. And actually the cost, I think, is going to be in the region of collectively around 35,000-ish, I would say. So that's then split 50-50 between the two councils. So once you'd added up the officer time that it would have taken us to do this, that far outweighs what it would cost each individual district to do that.
And is this something that was sort of decided a month ago or in the last week or so?
No, very, very recently. I went to our senior leadership team recently on this. There's a lot of work going on around strategies at the moment, and so the senior leadership team have been trying to align it properly. So they may not appreciate my honesty here, but the timetable for all the strategies, so we could make sure we weren't overwhelming people with consultations and everything at the same time, we've tried to plot them. There was a nice segue in for a piece of parking work, and so we've kind of taken the opportunity to go. So everything's sort of moving quite quickly.
Thank you. And the second question I had was going back, I think you quite rightly suggested that we could do this separately to Mid-Suffolk, and I think we should do, because, you know, personally, I'm quite sure Mid-Suffolk, from what I'm understanding from the councillor here, their issues and ours are really quite different. And I would feel quite uncomfortable, you know, sort of scrutinising. I don't know what, you know, in Hadley and in Sudbury, we've got very different ideas. The strategic review, how that should be, what we would like to do in Babergh, I think, to Mid-Suffolk. So I would like to recommend that this is done as separate districts.
Councillor Babergh.
Yeah, I'm going back to your, obviously with the consultants coming in. Can we bring the timeline so we reduce it by 6 months and actually have a definite date to June 2022 rather than December? I think that's what we need. I think to have it where we've got open-ended, and we all know what happens with open-ended things. No one's got a target, no one goes to them. So I think it'd be quite good if we actually recommend from this committee that we have a date of June, end of June, which gives you a 6-month reduction, gives you 12 months to do it, well, 11 months. And I think that's perfectly an adequate time period to be able to do this. I mean, we're only talking, well, Sudbury car parks, out of district, Lavenham, we haven't got many. And you know, I can't believe it's going to take so long to do this work, to get the data. And actually, Suffolk County Council did a lot of work about 18 months, 2 years ago. They had the consultants up with all the cameras and all the bits and pieces. It might actually be longer than that. Actually, it's probably about 3 years ago. I mean, that's still available with all the traffic movements. I mean, so half the work's already done. If you can bear to go across the corridor to someone in the highways, sorry, up the corridor, isn't it? They're above. And get that information, it would actually reduce a lot of the work. And I think we need, as a committee, I think it's perfectly acceptable to put a timeline in, which is what we're actually, one of the things we are asked to do. So I think a 12-month consultation period, Mr. Chairman, would be something I would like to put to the committee, and we can vote on that as a recommendation for full council, please.
Yes, thank you. We can come to that in a bit. Councillor Maybury, did you have another question?
Yes, I did, Mr. Chairman, and thank you. And I've also, well, they might be comments, but we'll put them as questions. Under 4.5 on page 40, you've got your list of stakeholder engagement, but not limited to. Could I ask that you actually add the ambulance service on that, please? Within my ward, we have had several situations where ambulances cannot negotiate to a patient. Apart from the fact I think the phrase is nearly taken out by an ambulance the other day on the road, but I didn't get the registration plate, so we'll pass over that one. The other point that I'm going to make is, when you're talking about that you don't actually have the all the capacity within your department. Now, this is something that I remember from 2016-17, and my colleague behind me, Councillor Barrett, probably remembers it too, which was when the CEO was going to appoint staff, he was actually going to make sure that staff had the adequate capacities, or they had the knowledge for certain things. And I have spoken to him recently in the last about 4 months over this too. So I'm really, really surprised that we keep having these come back, Mr. Chairman, all these types of things that come back to overview and scrutiny and council, where it says we do not have the skills within our officers, because this was actually put as a marker in 2016-17. I can't remember the exact date. And I think we... No, well, it was far before that as well. But I do actually think that that is something that perhaps this committee should be looking at as well, if we are allowed to, because obviously it's staff and it comes under the head of paid staff. And the third item I would like to draw everyone's attention to is 11.2, which is the last bullet point, where it's talking about electric vehicle charging points. Well, I could write a book on this, because within my own ward, we have the situation where we've been trying to put in extra electric vehicle charging points. UK Power Networks come in and say, oh yes, we can do it for this amount. Then they come back and say, you haven't got the power supply, so it's going to be increased. I've had this also in my own village where I live. We had an incident where they were trying to alter a cable, and they found out that it was just a mishmash, and there was not enough power in the village to actually supply what is there, apart from these extra electric vehicle charging points. So I think that that is the biggest issue in what you're going to do, because how do we get this power? I think we've got to actually look at the households that perhaps need this type of supply, that they have to have their own renewable energy supply to actually make them work properly. But I could write a book on it, and if anyone is disputing that,
Councillor Mabry, is that a question? Please, will you include on the list of consultees the energy supply companies?
I think it is.
Thank you.
It is. Thank you.
Was that your only question?
Yes, I did say questions and comments.
Thank you.
Yeah, actually, in addition to what Councillor Mabry has just said about ambulances, could I actually suggest fire appliances as well? The reason I raised that particular question, if I may, Chair, I've been having a lot of email conversations with residents on a particular area in Cedars Park in Stowmarket in the last week about the bin lorries not being able to get through. And I think this relates to my previous point about the parking on pavements and this type of thing. So have you done any work or looked at any of the work that the Department of Transport have been doing to produce this legislation, which, as I understand, is coming out this year? That's what I read about 2 months ago on the internet, because I think this is really, really important. Yeah, thank you. Thank you, Chair.
Did you want to respond to that, or should we just add that to the list of consultees?
I will briefly respond just to say you're absolutely right. There was a consultation around verge and pavement parking particularly. I really welcome that, because I think everybody in here will have heard things from their constituents about the issues that it causes, and I know that I have lots of conversations, particularly about Sudbury and Stowmarket, about those particular issues. So I'm very much hoping that that is going to bring about some good legislation. I too hope it comes this year. Everything seems to be nudging forward slightly, so let's hope it does come within this timeline, and then we can absolutely use it within this consultation period.
Oh, it keeps flashing on and off. Yes, it's a big issue in urban areas, but it's just as big an issue in rural areas, and much more difficult to get any enforcement. I'm going to take where was I? Councillor Scarf, then Councillor Carter, and Councillor McLaren.
Thank you, Chair. Yeah, I mean, following on from what Councillor Muller just said, actually our refuse lorries, there are issues across certainly Stowmarket where it has become a problem. But one of the things that worries me about this parking strategy is I think for it to do its job, it has got to look at the residential parking permit schemes within some of the urban areas of, certainly mid-Suffolk. It might not be a problem in urban areas of the other district. I'm sure it might be. But the clamour for residential parking permit scheme is immense. It's not going to go away, and when you launch out for this consultation with all of these parish town councils, residents, etc., you are going to get quite a bit of comeback on that. And the expectation, as Councillor Epping-Young has said, we've already got some amelioration, if you like, by having the particular streets that are really worse affected in Stowmarket having access to a lower annual car park fee, but that's only for 2 years. And this strategy won't be in for 12 months. And what worries me about the whole thing is how we can influence, as a scrutiny committee, the importance of the Cabinet beginning to look at residential parking permit schemes, regardless of who they think is actually financially responsible. Because I think at the end of the day, residents within Stowmarket would say, well, Mid Suffolk carry out through a contract with West Suffolk and Ipswich Borough Council the on-street car parking enforcement of waiting restricted areas such as double yellow lines, such as limited hour car parking bays, and therefore the logical conclusion would be that they would also carry out the same thing through an addition to the contract for residents parking permit schemes. And I really want this committee to actually, this is a good opportunity for this committee to actually make a recommendation that the Cabinet, certainly of Mid Suffolk, and I can't speak for Babergh members, seriously looks at the implications of a residential parking permit scheme, because otherwise we're going to be 18 months down the line, we're going to be at the end of the discounted scheme and we're going to have the same problem that, you know, has already presented itself. So I couldn't more wholeheartedly reinforce what Councillor Eckling said. We must look at these residential parking permit schemes and come to a conclusion, even if it means a financial commitment from this council, because I think morally, actually, we're morally more obliged to run the scheme than the county council. I mean, we actually enforce it in its other forms, so I can't see why we wouldn't, regardless of whether the county council is ultimately responsible or not.
Thank you very much. Yeah, thank you. Councillor Carter.
Well, to start with, I'd like to second that recommendation, if we do put it in as a recommendation for my colleague here. Other than that, it bemuses me when I listen to other councillors speaking about the payment parking, because clearly I've never had a problem with that in a personal experience, but I have got the I have got the fashion statement to go with it. But I digress. When I'm looking at in view environmental implications, section 11, I am pleased to see that it does regards about the air quality and the need to drive this down. I did wonder if we could actually broaden and extend the remit to just parking. If we could look at, if we've looked at a recent recent thing done by the Stowmarket Eco Futures Group, where they've been trying to implement no idling zones, such as at crossings and things. So whether or not we could, as a district, put on for signs on each traffic lights, things like that, it's recommending for no idling at these points. I did also wonder, whilst we're looking at parking, whether or not we could see about driving down the impact, CO2 impact of the parking bays themselves. If we're looking at if they need resurfacing, could we look at different properties of resurfacing? I believe it was Enfield are doing a trial of actually using the surfacing of a recycled plastic on their parking bays, which drives down not only it absorbs some of the light and heat to make it less damaging to the cars, but also has it gives off less CO2 when it's been put down. We could also look at whether or not the parking bays, if we could be areas for possible tree planting in between bays to absorb some of the CO2. And with the issues we have regards putting on electric points, whether or not we could look at solar points charging, putting over the bays. There was a trial being done by Tesco's, I believe, I can't remember where, but they put in solar panels over there, things for the EV points. And also looking at if there's currently solar panels on for the, I forgot, those arm things that go up and down for controlling of thing. Those are currently used solar on, I can't remember what hospital they use them. And lastly, I did wonder, whilst we're looking at parking as well, could we encourage encourage businesses and the like who are putting parking outside of the area to look at surfacing that is adequate for all, and also looking at for any developments going. There are still quite a few parking bays going in with shingle, and it is a nightmare trying anyone with a scooter or a wheelchair trying to actually get out the car and to access any property, especially if it's up the slope. Shingle's near enough impossible. Does damage to the vehicles, and so if we could look at encouraging putting in solid parking surfaces, that would also be a benefit. So, thank you.
Thank you, Councillor Carter. I think that I couldn't detect a question there, but I'm sure there was one somewhere. Can I go to Councillor McLaren next, and then we'll go into a debate, because I think we've already crossed the threshold and we're into debate anyway.
Yeah, sorry about that. Trying to move things along.
Thank you, Chair. Cassandra, I do want to add to your list. We all came with lots of lists, didn't we? I'm sorry about that. Obviously, park and ride facilities should be in there. But the other car parks that have not been considered are hospital car parks. Now, the reason I say that is because as a result of the pandemic, and in the light of, say, West Suffolk that is building a new hospital, long-term healthcare, and I can't give you any dates on that, is going to be more in the community than ever before. Hospitals are going to shrink in size, and therefore our catchment areas of both West Suffolk Hospital and Ipswich Hospital affect both councils. And I think we need to bear in mind that there may be centres, and if I talk about Shotley Peninsula, there's not many centres where satellite care could take, and I think that will have a big impact in our communities. The other comment I want to raise is about your risks, your key risks. And I'm sure you perhaps can foresee what I'm going to talk about, but the risk about motorist behaviour. You, in your risk assessment, felt that the inability to influence motorist behaviour was highly unlikely. I think that's what that means, doesn't it? I just feel quite strongly about that, and and Councillor Gould will probably support me in that the Shotley Peninsula is a good example where you cannot influence motorist behaviour at all. And I can't speak for the rest of the district, but from a personal point of view, I think that is very likely that there's going to be difficulty in influencing motorist behaviour. Because as we've seen over the pandemic, in Shotley, cars just get abandoned, even if there are parking spaces. And it is not conducive to country lanes or small hamlets. So I just disagree with that assessment of that risk. Thank you, Chair.
Thank you. Right, we're properly into debate now. Councillor Gould, I think you were next on my list.
Thank you, yes. You think masks and glasses are bad, do you want to have hearing aids as well? Just to say, really, I don't know whether it's answered a question, that presumably we're talking about car parking, but is this car and cycle parking? Good. I couldn't actually see it anywhere, but I felt sure that that was the case. I'm not sure I completely agree with Councillor McLaren. I think we can influence motorist behaviour, or motorist behaviour can be influenced, but I don't know whether a parking strategy is the mechanism for it. Personally, I think public transport, improved public transport, which isn't ours to gift, it's not within our remit. But if the buses ran regularly, were cheap enough, and they took people where they wanted to go, people would be willing to lose their cars, but that's not ours to gift. Thank you.
Thank you, Chair. Are we moving into debate now? Or we okay, fantastic. I come back to the risks, and Councillor McLaren's picked up on one of them, but I'm interested in risks, the third and fourth risks. So the third risk talks about the inability to understand and prepare for future growth needs, for example, houses, business, etc., and it says highly unlikely impact disaster. Well, I would suggest that without any casting any aspersion that we're already at that point, because it seems to me one of the influences on bad parking is the fact that actually we approved planning permissions for housing builds where in fact it would seem to me and many others that the allocated parking, whether it's a garage or mostly garages, actually are moving in the opposite direction size-wise to the direction in which actual motor cars are being produced. So actually people are not using their garages to park their cars, they're just using it as extra storage. Now, you know, I've lived in other countries where, you know, in such circumstances that just wouldn't be permitted. I mean, you know, the garage is for parking cars. And obviously the end result of not putting your car in the garage is, if you're lucky, you put it on your drive. If you're unlucky, it's on the street. And I think the issue is that today, and particularly in our districts, you know, where there's a high dependency on cars, for good or bad, I mean, most cars have at least 2 cars, and some households will have 3 or 4 cars. So, you know, our ability to, you know, affect the stakeholders, risk number 4, seems to me highly likely rather than unlikely, and therefore, for me, the impact will be further disaster. And I do, you know, I think that's something that we need to consider as part of this joint strategy work that's going to take place. And I think other than that, I think everything else that's been said seems to be particularly relevant. But I mean, once again, I would make the point about the need to seriously put through an action that particularly focuses on parking permits. Thank you.
Do I have any other speakers, please? Can I just make one point that occurs to me, and that is that I think that there are real opportunities for a parking strategy to influence walking and cycling and the use of public transport, because park and cycle, park and walk, park and bus, and park and ride as well. I mean, there's all sorts of opportunities, even in some of our tourist villages. I'm not looking at Councillor Maybury just in case, but there are a number of villages where there could be improvements. The car parks could be provided so that people are encouraged to walk. So I think that there is a real opportunity there, and being able to park to get a bus, just as we park to get a train. So I think there are opportunities there. Councillor Caston.
Just to add to what you're saying there, Mr. Chairman, would carpooling also fall into those categories of where a car park would be quite useful? With the A14 going through our mid Suffolk and, you know, other roads in Babergh, carpooling, quite often a van will pick up 2 or 3 people on its way to a further destination, and it does cause problems in some of those villages beside the A14 where cars park there for for a working day. But also, yeah, I just wondered if you would you were interested in adding carpool into that list of reasons.
Yeah, did you want to add something?
Yeah, it was just to say I agree with both of the points that you've just raised, really. So this parking strategy should complement and assist all of our other strategies. So within wellbeing, within communities, within the joint local plan, within economy, you know, Councillor Beck, when you spoke about the sustainable travel plan, it should all complement each other. So I don't want this to be a really restrictive strategy that just talks about a physical car in a place and doesn't take account of the rest of the environment around it. So absolutely agree with things like carpooling. Let's have a look at that. Let's get that. Is that something we support? So as I say, I'd like this to be a document that if a member of the public read it, they would know our stance on what we think should be happening in our district. And to do that, it can't be restrictive. It can't be just closed off to a car park, for instance.
Thank you. Councillor Carter.
Thank you. I did wonder as well, could we include it, look at a point as a accessibility standpoint as well as a parking standpoint? If we looked at putting cycle bays where car parks where you can actually access a bicycle, and also as it was brought up in a recent workshop, looking at mobility, shop mobility schemes where you can actually pick up a wheelchair or scooter, and possibly looking at drop-off points where you can take it from one town and leave at another one, which actually would not only increase the ability for people to get accessibility, but also might make them less likely to have to get a car to get from A to B if they can drop it off somewhere else.
Yeah, thank you. We have got on our list at 4.6 Suffolk Disability Forum, so we could add, at that point, we could add something along the lines of what Councillor Carter has suggested. I've made some quite long notes here, things that people, I feel, would like to see added as part of the recommendation, or and I just wonder if I could read what I've got here, if members would consider whether that might form for them a recommendation to go on to Cabinet. And one of them was that we note that with the use of consultants, the timeline can be amended, and ONS request that the final report to Cabinet be presented in June 2022, which is what I think Councillor Barrett was suggesting. And then that there should be 2 separate studies, one for each district, and then the study to include everything in 4.6 plus the following: parking on pavements, concerns about town centre on-street parking, implications of residential parking permit schemes, voluntary groups, emergency services, electricity supply companies, the climate impact of car park maintenance and management, park and ride, hospital car parks, opportunities for using the strategy to encourage walking and cycling, use of public transport, and carpooling. Councillor Scarr.
Yeah, I've got no disagreement with the sort of the general thrust of that, but I feel that in particular with the residential parking permit scheme, particularly that pertaining to Mid Suffolk, that we actually need to have a separate recommendation for that, because my understanding is that Babergh members may not support that, and it's one that I would appreciate going directly to Mid Suffolk's Cabinet in isolation if Babergh members aren't. And I have got some wording for that if that's the general feel of the meeting.
Yes, if I may, Mr. Chairman, I was getting very excited there. Councillor Scarf, we do need some resident permit parking in Sudbury, definitely in Lavenham, and I'm going to suggest some of the smaller villages as well, such as Monks Ely, Brent Ely. This is where they are heritage buildings, never ever envisaged having a motorised vehicle or somewhere having to put one. So yes, we do need that as well. Thank you.
Councillor Scarf.
My motion to include Babergh as well. But I just feel its prominence will be overlooked if it's part of a generalised comment type recommendation as you've written out. We have looked at a lot of issues this morning, and it's not to say that residence parking permits are any more significant than any of those other issues, but I feel that the prominence of the residence parking permit scheme resolution is one which we should make as a separate recommendation.
Chair, I might have to. Is Councillor Gould leaving the meeting? In that case,
Councillor Gould.
In that case, as far as I can see, Babergh Overview and Scrutiny Committee is no longer quorate. 3.
If you leave, then the Babergh element of the Overview and Scrutiny Committee is no longer quorate.
We're nearly there then.
Well, I think we are. We're very nearly there.
I have another appointment very soon.
Right. So, Councillor Ekping, Councillor Muller after that.
Thank you, Chair. Very quickly then, assuming that we go ahead with Councillor Scarf's motion, I will be very happy to second that.
Yes, I too totally agree with Councillor Scarf's motion as well. Thank you, Chair.
So, in summary then, we note the report and the shortened time frame in the words that I read out. We ask that that list of different organisations and considerations be added, and we have a separate part of the motion is, as Councillor Scarf has suggested, rather than lose it in amongst the list, that we actually highlight that as a separate need to be considered. So, Councillor Scarf.
Sorry, Chair, I'm not usually this pedantic, but the wording of my motion would have said that this committee recognises the urgent need for a resolution to residence parking permit scheme issues within both districts, and in doing so recognises that both districts will have to consider potential financial commitments to such a scheme, and that work on this subject must be carried out within the JPS. I think the emphasis is that the Cabinet needs to start thinking about the financial commitment that they may well have to make, whether they're legally or, in my view, morally responsible to do so. And I think otherwise it will get lost.
Yeah, I fully support that, and I think Councillor Ekping, were you seconding those sorts of words? Do we, trying to hasten to a vote to help Councillor Gould, do we need to read that all out, or is there sufficient there that you can trust the chairs and the officers to formalise that into a lengthy recommendation to Cabinet? So, are you content then that we actually vote on that now? And are you happy that you've got enough?
Yes, Chair, I got most of your recommendation, and I will pick up Councillor Scarf's recommendation and add that to the vote afterwards. It will be now that we have the vote is for noting the report as the first recommendation, and that the following recommendations as read by the committee clerk. In this instance, I will take it as read by the chair.
Okay.
So the vote is started on the agenda. You may have to scroll down a bit. Councillor Maybury?
4.
Thank you. So, Chair, we have 9 votes for. That's unanimous.
Yeah, thank you very much. So we've still got 2 information bulletins to here. So do we, if we are now in quorate, do we have to conclude the meeting? Where do we go from here?
Excuse me, Mr. Chairman, if I may.
Yes?
So there are two of us here. The Constitution Part 2, Members 6, Quorum 2. So we could still be okay, Mary. The two M's may be holding the fort.
To be quorum, we had to be 3. That was my understanding.
One moment, Chair.
Councillor, maybe I hope you're right, but I thought it was 3.
Yep, it's printed off. It says 2.
You've obviously read it more recently than I have.
Oh, I've been at work.
What is the date on that, Councillor Babergh?
Effective from the 7th of the 5th, 2019, unless it's been... No, this is the same one, this same copy. I've got here, I've got a bigger copy.
Chair, if I can help, the relevant rules are the Babergh and Mid-Suffolk Joint Overview and Scrutiny Committee rules, which actually say that the quorum is 6 and it must be 3 from each council. Therefore, the joint committee cannot continue.
Right.
So this is just for Babergh then. My apologies, but I was trying to be helpful.
And so, Mid-Suffolk Overview and Scrutiny, because it's called as a joint meeting, we can't continue either. So I have to therefore declare that is the end of the meeting.
Okay.
Is the best thing then to stop recording and then you can tell us where we go from here?
Yes. So the meeting is terminated at 1:28.